Today, we're going to be talking with Bronson Hill of Bronson Equity. He's been in the syndication space for a while now, and he actually used to be the director of investor relations for a large syndicator and has talked to over 1,000 different investors. Let's hear what he has to say. Thanks so much for joining us. Really appreciate it.
Awesome, Chad. I am so excited to be here. So excited to be here with your audience. I love talking about money raising and adding value to people. And I really know this is going to be a great conversation. So thanks for having me.
Yeah, I feel like we could probably talk about this for hours and hours, but we're going to try to keep it to 20 minutes. We'll see how we do. You got some of your hairs out of place up here.
Yeah. I had my hair and makeup. They were working on it, but I couldn't quite get it even after all. You know, the chemical. Fine, so.
I'm glad I know you well enough that I can just throw a jab your way. And you can tell me that you like my Hollywood hair, like put a little too much mousse in my hair.
Oh, man. I live out my dreams of hair and people like you, man. You got just that blonde, Southern Cal, super dude / business guy hair that I just wish I had, but I can celebrate you and your awesome hairs.
Well, you'll actually be able to appreciate this. I was just on a call earlier today. They're talking about mentoring. They're like, what you need to do, everyone needs a mentor, and you got to find either a guy who's bald or gray, and that's the guy you got to go to. And this was just like an hour ago. I'm thinking like, oh, it's Bronson. I'm talking to Bronson in 5 minutes. So you got that going for you. You know what I mean?
I can't say I'll have less hair in 20 years because, I am where I'm at. So.
Yeah. Why don't we start it off? Maybe you could tell us a little bit more about your background and how you got into real estate.
Sure. So I basically have a background as a business professional. I was a consultant in the medical field. And basically, I had been doing single family, just had a home that I had owned for a long time, kind of became a accidental landlord, realized over time this was actually a pretty good investment. Some time went by, I started doing more single family stuff out of state. I started buying some houses in the Cleveland area, actually, for as cheap as $15,000, doing some big renovations on them from a distance while living in California, which I guess that's a whole nother conversation about that. But my goal was basically to get these, eventually 30 single family homes and have enough passive income to retire from my job and basically just do this full time. And then I realized it's even having a few of them. We only had 4 or 5. We just a handful, but it was a lot of work. I mean, there's a lot of things. Even with a property manager, I was getting calls all the time. We were doing these projects, had issues with contractors and tenants, and it was just a lot of work. And so I came across a relative. I have a cousin that's a little more of a distant cousin I just hadn't seen in years. And he's a successful multifamily investor. And I started telling my grand plan of basically doing these single family houses in another state. And he said, well, it sounds like a lot of work. Why don't you do multifamily? And I said, well, I'd love to, but I don't have the money. And he said, well, you can raise the money. So he said, read this book, listen to this podcast, go to this training. And I started learning about this crazy thing called real estate syndication. And so, basically there's a lot of things that happen in between, but now I've raised over $15 million for about 800 multifamily units. It's 4 different properties. It's about 60 million worth of real estate. It's been an awesome ride. I've actually launched my own venture where I partner with experienced sponsors. I take passive investors and we do deals. So that's a little bit of my background and kind of how I got here.
Cool. Yeah, I was reading up on your bio, and I saw that you were the director of investor relations for a large syndicator, and you'd talked to over 1,000 investors. And so I really wanted to hear and kind of dive into that a little bit more. I mean, you and I are in a similar space. We talk to a lot of investors, and from all that experience that you gathered, talking to 1,000 different investors, and really about real estate, multifamily syndication. I mean, it is a niche, and you had a ton of conversations. I was hoping to dive into that a little bit more. And what did you learn about like some common themes and concerns that these investors had?
Yeah, so I guess after talking, I mean, these are, over 1,000 calls, one-on-one, 30-minute phone calls with investors. You learn a lot about who are the people that are interested. We did kind of an overview study, found the average net worth was a little over $2 million. Some of these were, $10 to $30 million investors, but really just the mindset of a passive investor. And I'm sure a lot of people watching, if you're watching this, you're interested in how do I understand more about this? But really what I learned through that process is you typically have a few different types of people. You'll have people that are busy professionals, typically doctors, lawyers, business owners, attorneys, CPAs, things like that. They're just very, very busy. Their time is very, very valuable. And so, a goal of that type of person is typically they pay a lot of money in taxes. So if you live in California and you're a high earner, your son is paying over 60% of your income in taxes, which is just awful. If you're a real estate guy, you're like hopefully paying nothing in taxes. You try to get there. But for people that are busy professionals, just teaching them the idea that you can get better returns with lower risk, and you get all these tax benefits to where you pay less or sometimes no tax on the money that you're making through this whole other bucket that's called real estate passive investing. So kind of what I realized in this is a lot of people kind of see this as this like, oh yeah, that's great. Or passive investing is when I invest in stocks with my money person or index funds. But really this actual passive investing is something you really don't have to manage. So it's the idea that you can become comfortable enough with an asset class such as multifamily real estate investing. You can vet a sponsor, you get invested in a deal. And I always tell people, if you have a net worth of 2 million plus, put the minimum in, put 50K, put 100K, put whatever that amount is, put a smaller amount in and just see how you like it. And likely, even whoever you invest with, usually the investment will turn out just fine. And then you'll learn a lot in the process of how do I like working with this investment? How do I like working with this sponsor? How are the tax benefits for me? We have a lot of people that kind of start that way, kind of dipping their toe in. And then after a while, they realize, like, oh my gosh, I get twice the returns without the volatilities of the stock market. And it just feels so much better. And especially with these tax benefits, it's just really unbelievable.
Yeah. What about the GameStop guy? Did they say the same thing?
Well, I think GameStop, yeah, exactly. Yeah, it's so easy. You just invest in all these short squeezes. Well, that's the nice thing. What we do too is we're not really affected by those day-to-day fluctuations of the market, and speculators coming in and things like that. So that's a pretty. I know at the time of this, GameStop, that thing just happened. I think they're focused on silver now. So we'll see what the next target for these short squeezers are. So
yeah. It's interesting. You talk about the stock market ups and downs, and right now, GameStop and AMC, everyone's talking about these going up, 500% and huge returns. But the interesting thing is, especially when it comes to the short squeeze, there's always somebody else on the other side of that equation. So like in the media, you're hearing about these crazy stories of these guys making tons of money. But there is somebody on the other side of that equation who lost the exact amount of money on that option, right? And they're not talking right now. They're really quiet. Those guys are probably calling you and me and saying, hey, I got to get out of the stock market. I got to get into something secure like real estate. But there is always someone on that other side of the equation when it comes to those options and short sales that they're doing.
yeah, the amazing thing about all this too is like when we think of like traditional investments, actually they say stocks and bonds or these financial assets are traditional investments. But it's crazy to me because if you had any investment that you knew you could lose 50% in the next 12 months, like that doesn't sound very conservative. That's happened multiple times. The last 15 years or 20 years, that's happened at least twice, maybe even several times where we've had major drops of 30 to 50%. And so, but what I've realized about that is these Wall Street firms, they spend billions of dollars educating the public that, oh, you should put money in your 401k. And it's amazing that now it's over, I think it's 52% of all the money in stocks is actually in retirement accounts. Yeah. And so it's just amazing. It's become this herd mentality. So the idea of alternative assets, even though I don't think real estate's an alternative asset, it's technically, that's what they consider it. It's just an amazing, stable thing a lot of wealthy people use to, secure their wealth.
Yeah, and certainly it's been around a lot longer than stocks and bonds, right? So the fact that it's still referred to as alternative, I'm not so sure, but I'd agree with it. But it becomes semantics because it really has been around forever. So when you're speaking with the investors, and have you seen like a certain vetting process that they would go through in terms of trying to figure out where they want to be putting their money or which syndicator they want to be putting their money's worth? Have you seen that there's a certain vetting process that they're going through?
Yeah, so I'm assuming this, is going to be watched more by people raising money. But yeah, there is. It's basically when I'm on the phone or I'm on a Zoom call, which is typically what happens. I try to figure out who I'm talking with because there are going to be different types of questions. There's kind of the wealthy newbie person that just doesn't know much about it. It's just completely new to this. And there's a lot of calls like that. I'd say maybe 30-40% of that type of person. They're just completely new, getting introduced to all of this. There's a group that has some familiarity, is kind of, really, okay, maybe comparing sponsors, looking at different things. And then you have a group that's very sophisticated, that has been doing, maybe have been doing deals for years. Maybe they're operators themselves. Maybe they do certain things. I know you and I both do some things passively as well. And so, we might be kind of in that last category, but it's trying to figure out who we're talking to. I think some great questions to ask, or just in general, some common questions are, tell me about your experience, what's your business plan, what is the common thing that you've done. And if somebody's like, well, we buy everything everywhere, we look for it, it's like, that's probably not a good sign. But if you're like, we buy B and C class assets in Memphis, in this submarket, we've been doing this for 5 years, this is the value add approach, these are the specific returns we're looking for, this is our best deal, this is our worst deal. Those are great succinct answers to have, because it's like, as we're working with a broker too. If you're working with a broker looking for a deal, if you just say, well, just send me a good deal, it's like, well, that's, a broker's probably not going to call you back, right? They're like, they're going to want that specific information, like what I said, looking for this property built within this period. So the more specific the questions are, I really see how sophisticated someone is and how they've educated themselves. But again, we get kind of all ranges of people. And the reason being just that, a lot of people are just unfamiliar with it, because obviously we don't really pay, besides maybe a few Facebook ads, that I don't really pay much to advertise what we do. And so, so I think it's interesting to see the different levels and the questions people ask.
Yeah, it's interesting because you talk about like multifamily syndication as being a niche, but even within that niche, there's a ton of different approaches you can take, right? And I know for the deals that we're doing at CSQ Properties, every deal has a different business plan, if you will, to it, right? Some of them might be more on the stabilized side, where the rent's already kind of high, and it does happen to be a good deal that you found, and it's got good cash flow, and that can work, right? Or you can do a value add deal where maybe you're turning over the entire building within 6 months or 12 months. And you've got a value add component that you're doing where you're raising rents after you turn the units. Or maybe it's even something that goes a little bit slower, and you've got units that are being rehabbed as they're naturally turning over. And that could take 2-3 years to kind of fix up the whole building. And then you've got kind of like everything in between. So it really, I think that's where the experience comes into play, and the team that the syndicator is working with, because there's no cookie cutter approach on this. Each deal is going to have its own nuances and its own little details that are a bit different, that make it unique and make it, rewarding financially for the investors. And I think that really makes a big difference. And it kind of speaks to the experience of the syndicator.
Exactly. Yeah, no, it is really interesting, to hear how those questions are answered by different syndicators. And you can really, especially if you have, phone calls with 10 different sponsors, you can tell who's new and who's been doing it a while, and where their gaps may be, or how it differs with your investment philosophy. And I think that's the really good passive investors. They can know exactly which questions to ask. I have some friends that are full-time passive investors. I have one friend that's invested over 30 deals. Right now, he's actually at one time been invested in 70 deals. Which I think is just exhausting, but he spends all his time networking and looking at deals, and he's really good at it. So, but again, I think that's, I think a mentor told me one time that basically when I was looking at single family houses, saying, well, if you walk through 100 houses, then you'll know what a good deal looks like. And I'm not saying not everybody has to go through 100 deals, but if you were to, you would have a pretty good sense of, like really kicking the tires and knowing what it would look like.
Yeah. Yeah, it makes me think of Dan Hanford is pretty big in the space, and he always talks about his triangle, right, of know, like, and trust. And you need to find the person or the syndicator that you first have to know them, and then you start to like them, and then eventually you trust them. And I think that really goes a long way in terms of a passive investor vetting somebody, right? Because there's always the trust part of it. There's always going to be something that comes up in the deal, right? It never really goes 100% according to plan. There's always some hiccup that happens, right? And there's usually lots of hiccups. But when those happen, is this a person that you can trust that's going to be making the best decisions possible for that given situation? And if you can trust them, then it really does let you be a truly passive investor. You're not involved in the day-to-day at all. and you're trusting this syndicator or this company to do what they need to do, which is in the best interest of the investor. And in that regard, then it truly does become passive income.
Yeah, absolutely. I was going to say one side note too, because again, I know this is basically going out to probably a broad audience, but one thing I've realized is as someone raising money is that there's really two activities that you're doing, and somebody who's doing real estate. I know you're a very active operator doing a lot of different things. One is the actual real estate business, where you're actually operating, you're finding deals, you're doing those construction. You show me some of the projects you've done. They're really impressive on how you come in and just in a short amount of time can bring all this value and raise rents. And in California, which is even more impressive. So you just have a real lock on that, which I've really been impressed with, stuff in Long Beach that you've done. But also the second business is kind of like what we're doing right here. It's basically this marketing type of business where we let people know what we're doing. We let people know we add value to this conversation. So whether somebody is a syndicator themselves, or they're somebody who's looking to invest, they say, hey, here's somebody that I feel like I'm getting to know a bit just by watching their videos, listening to podcasts, seeing interviews, reading their blogs, things like that. And I think that's like what you're talking about, the know, like, and trust. That's how people really get to know, like, and trust you. And for example, there's one of my former partners when I was working with him. He's a well-known guy and has a successful podcast. I listened to the podcast and watched a bunch of videos. When I met him, I was like, oh, hey, how's it going? Like, I went up and met him and was all excited. He was really standing out, like he didn't know who I was. And so it's funny. That's an example of what you're talking about, the know, like, and trust. So I think it's really important.
Yeah, I mean, you felt like you knew him for years, right? Because you had seen so much of his content and you connected with it and related to it. And then you see him face to face. It's like, hey, like an old friend. He'd never seen you before. What do you think with all the investors that you'd been talking with? Is there like a craziest story or wildest request or something like that sticks out in your mind after talking to so many different investors over the years?
Yeah, well, I've got two. I'll just touch on one. I don't want to get into the other one, but there's this guy that invested in one of our deals. He invested in multiple deals. He was kind of a really challenging guy to work with in the first place. And he had invested in a deal and then somehow forgotten that he'd actually invested in that deal. And so we kept sending him notices like, hey, here's your thing. We need you to, here's your K1, whatever. And he kept getting back like, oh, I didn't invest in this deal. I didn't invest in this deal. So one of my partners and I were like, man, this guy doesn't even want his shares in the deal. Maybe we just will, obviously you can't. So you keep sending him his stuff, but it was kind of an awkward situation. So that was one thing that was very unique. The second one, and this happens from time to time, where I'll get literally the guy who we have a conversation or they have a couple questions, and then they'll send you an email like that day or the next day, or they'll follow up and say, oh, hey, I thought of some more questions. And they'll send you 100 questions. I've literally gotten 100 questions, and they're like really in detail. Tell me a time that your cap rate exit was not exactly where you thought, and why was it? And this and that, like multiple parts of the same question. Thinking like, there's no way I'm going to be able to answer all this stuff. So I always tell investors, hey, if you have any questions, let's do it on the call. If you've got a few follow-up, that's fine. But more than about 5 or 10 questions, I'm going to say, let's have another call, or maybe you need to find another sponsor, because I'm not going to answer your that many questions. Exhausting. So anyway,
sure, it's a full spectrum. So for the guy that was forgot that he was in your deal, what was he doing like every month or quarter that you were receiving the dividends? Was he just thinking that you guys were the best thing, giving him free money? But what was he doing with it?
Yeah, well, it was interesting. This guy had a history of kind of being obnoxious. So we just kind of like decided we weren't going to work with him in any future deals. And so this was the last deal he got in on. But yeah, we would send him his monthly statements. We did monthly reporting. So we'd send that to him, and he would just respond like, yeah, like every few months, like, I'm not in this one. I don't know why you guys are sending me this, whatever. And we went back and we checked it, and we're just like, well, yeah, here's where he wired the money, and here's what happened. And this is like in his retirement account, and it's sent over. And so, I mean, we really didn't know what to do, because the guy was challenging to work with anyway. It wasn't like necessarily a reasonable guy. So it kind of made it doubly. So we just kind of kept sending him his statements and kept, you got to be cordial. And, he probably thinks he's getting an amazing deal. Maybe we'll refer to everybody else saying, hey, these guys, they just include you in deals you're not even in. And we're thinking like, we see that you actually wired 100K over. So it's a little awkward, but it was just strange. So he's a strange individual. And as you do money raising and you work with different investors, you do meet some very interesting people.
Yeah, he was probably thinking it's like one of your specials, like buy 5 deals, get 1 free.
Exactly. I'm waiting for that one. That one doesn't happen to me yet.
Well, good. This has been super helpful. It's been great hearing all these stories from your experience with so many investors. If anyone wants to get in touch with you, what's the best way?
Yeah, so the best way, my website, bronsonequity.com, I've created a free report that talks about the best investment strategy during and after a pandemic. So you can download that for free if you like. You can reach out to me there, or just Bronson at bronsonequity.com.
Cool. Yeah, it sounds like the report is really timely. We're still dealing with COVID as we speak. So
Yeah. There's all kinds of opportunity. I do think right now there's just some really unique opportunities that will not exist in the future that people have a short time to take advantage of, and so it's very exciting to be an investor and be an operator during this time.
yeah, I couldn't agree more. Whether the market's up or down, there's always money to be made. So that's what we're doing. All right. Well, thank you so much, Bronson. This has been awesome. Really appreciate you hopping on board with us, and we'll see you on the next show.
Awesome. Thanks so much, Chad.
So it really is quite a wide spectrum of concerns that investors have when they're vetting a syndicator. Either way, they're looking to make good passive income, and that's what it's all about. If you'd like to learn more about what CSQ Properties is doing, you can check us out at csqproperties.com, or you can also find us on Facebook and Instagram. Thanks a lot, and we'll see you on the next show.